After surging more than 4 percentage points on Tuesday, oil prices stabilised somewhat early this Wednesday, but ongoing fears of a US direct intervention in the Israel-Iran conflict continues to rattle investors. The possibility of Iran closing off the Strait of Hormuz, through which an estimated 1/5 of global oil supplies flows, is also of note. To get the latest on the markets, let's speak now to Chief Market Analyst at GTC, Jameel Ahmad. Jameel, the US is seeming to get closer to joining Israel in that campaign against Iran. How are investors reacting now to all of that?
Day by day, it does seem that the probability of the US intervening in the situation is increasing. If you look at Donald Trump leaving the G7 summit early yesterday due to the situation in the Middle East, which then means that ongoing economic issues such as trade tensions and trade relations and so forth weren't really focused on. It does show that the US president and the US administration are getting close to getting involved. Global financial markets are not yet pricing this in fully, but in light of how we discussed this at the beginning of this week, financial markets are also showing some signs of stability, but they're not really rebounding into high momentum, which suggests that investors are getting ready to potentially enter some negative positions on global financial markets when or should the US get involved in this conflict. We still have gold prices within reasonably $75 or so of the all-time highs that hit late April. Of course, if the US does get involved in the situation, we would start looking towards those all-time highs close to $3,500 US. And oil prices have still shown a lot of volatility in light of what is an increasingly fragile situation.
Okay, so definitely one to watch. Jameel Ahmad of GTC, thanks very much indeed for joining us.